Good afternoon, everyone, and happy Thursday. Thank you for joining us again for another episode of Self-Storage Unlocked. Today is finding the sweetest self-storage deals with feasibility and market studies. And actually today I have a guest host, so I'm taking a break from today. So I have our very own president and co-founder, Ian Burnstein, that's going to take over today. Hey, Ian.
How is it going, Jess?
It is going. I am in sunny Arizona at the Arizona Self-Storage Association show. I'm happy to be here, happy to be seeing everyone. And for everyone that's here live that cannot attend, that they will be able to watch the replay as always on our YouTube channel. So make sure you check out the SBOA on YouTube, LinkedIn, Twitter, Facebook. Follow us, please. Ian, I'm going to let you just dive in and bring up the guest speakers for today. But one quick thing I wanted to point out to everyone, we want to kick today off by getting to know more about you. So if you go into the section where it says polls, we have a few poll questions up there for you. If you could take a few moments and answer those, that will help get the juices flowing of this conversation. So Ian, I'm going to let you take it away and introduce your panelists for today.
Great. And my juices are flowing, so that's good. Thanks for having me today, Jess, and thanks everyone for joining. We've got three great panelists today. So first, we've got RK. RK, why don't you tell us a little about yourself? Thanks for being here.
Well, I'm the old geezer in the group at not only in age, but maybe almost as much storage experience as you have, Ian. I'm 36 years in the business plus, and have gone to consulting and developing my own stores now after having been in charge of acquisition and development for firms like Extra Space and the predecessor to CubeSmart and the Metro Storage guys. So just trying to share the knowledge and learn more as I go along the way.
Great. Well, we're very happy to have you here and happy to have you share your knowledge because you certainly have lots of it.
Thanks,
next we have DEVIN Huber.
Hi, Ian.
Good to have you here.
Yeah, it's great to be here. Thanks for having me. My name's DEVIN Huber, and I'm Canadian. That's my fun fact. I've been in the storage industry for about 17 years now. I focus on financing, so I help investors, developers find debt and equity for their developments and their storage investments. I am a principal at the BSC Group. We are mortgage brokers, again, that provide capital for storage owners. So we're really excited to be here and look forward to a good discussion. Great.
Thanks for being here. And we, at Storage Pros, we've done a tremendous amount of work with the BSC Group and just had a great success. And Devin, remind us, where in Canada exactly are you from?
I'm from the great province of Saskatchewan, specifically Regina, Saskatchewan.
Thank you. I think I knew that, actually. Thank you. Thanks for being here. Okay, Matthew Van Horn. Certainly not last, but certainly not least. So, Matthew, tell us about yourself. And
how you doing, Ian? I'm the founder of a company called Black Swan Storage Advisors. This is my 22nd year in the self-storage industry. I actually kind of grew up in it.
I'm 20 years too. There you go.
It's been a long time. And I specialize in feasibility studies, investment analysis, and management and operations. So it's been, I'm excited to do this. It's been a very busy time.
Good. Well, thanks for all of you for joining us. And I'm sure everybody here will get a ton out of the panelists here. So, okay. So we're going to start out. I'm actually going to start, Matthew, with you.
Okay.
If I'm new to the space or if I'm looking for someone to help me out, where would I begin to look for a feasibility expert?
Well, I believe you start with some of the, kind of ingrained, accepted professional organizations in a sense. You're like the SBOA, for example, or your state associations, national associations, places like ISS, SSA. Those are where you're going to find the people that have been doing this the longest. I've kind of said this to a few people, self-storage over the last few years. And I don't think, again, you read about it in the Financial Times, the Wall Street Journal. It's great. Everything's wonderful. Everybody's, coming into this. They see how we've performed, say, maybe during the pandemic. It's been very strong. And so, for those of us who say, for example, where I live in Florida, where hurricanes come through, when a hurricane comes through, all of a sudden, everybody you didn't know is a roofer. Well, the self-storage industry is so popular right now, there's a lot of people popping up that are selling different things that may not have been in the industry that long. So I think going to reputable sources and really researching is the first step anyone should do. And you should interview multiple people and really dig into what their background is.
Great, helpful. RK, anything you'd like to add?
No, I think Matt hit it right on the head. Going and finding how deep they are in the industry and what kind of experiences they bring with them is really important. You know, have they actually owned and operated a self-storage property? Do they currently own and operate? I think most of the folks who are doing studies are in that position, but there are, as Matt said, a lot of folks on the fray right now who are trying to get in on it and don't necessarily have the depth of experience that really helps them to understand markets and understand how a store might function in that market.
And so, RK, along those lines, how would you differentiate a feasibility study from a market study? What's the difference?
Well, that's a great question, Ian. And it's really troubling for some folks because they think they're getting a feasibility study when they really are just getting a market study. And the difference really, in my mind, and Matt, you probably may see the same, and Devin, you may want that qualification, is whether or not they're giving you cash on cash returns, developers yields, internal rate of returns, discounted cash flows, all of the metrics that go into the engine and the heart of it. Because I just looked at a market this morning and I felt really bad because it was an awesome market. I knew a store in that market was likely to do very, very well. But when I started to run the numbers and realized that I just couldn't make $1.89 rents work in that market, it quickly fell to the fray and had to say, let's pass on this one because we just don't have rental rates to support the cost today of development. So, you know, you might have a great market. It might function very, very well if it got built, but if it doesn't make economic sense, it isn't feasible. And that to me is the main difference between feasibility. You know, do you have a schedule of values in there so that you have a breakdown of your costs? That's a pretty important part of it. Do you have 7 years worth of projected cash flows? Do you have all the assumptions that go into those cash flows projections? Because that's really, really important. If there's one risk, I think, itinerant to even owning self-storage and projecting rents. Because nobody has really a good crystal ball that I know of. So in the absence of that, we have to use science and data and experience to project rents.
Right. So
Yeah,
Devin,
I just wanted to add one thing too. When selecting someone to do the feasibility study, knowing their experience with banks, because you're going to end up needing to use this feasibility study to get your construction loan. So making sure that whoever you use has interfaced with lenders before and that their feasibility study has been accepted by lenders is hugely important, because we've run into situations where someone's gone out, gotten a feasibility study, but it's from someone that the lenders just don't find credible.
great. Are you finding most people, Devin, when they get to you, do they mostly have feasibility studies? If not, you know, how do you kind of direct them to the right market? What criteria are you using to the right person?
It's a mixed bag. You know, you have some people who, you know, we like to say, and we were laughing about it yesterday. We like to say that, you know, you really shouldn't be developing a site if you don't know your market well enough. So the first place you start is knowing the market yourself, knowing your rents, knowing your competition, and all of that. The feasibility study is really just to verify, you know, your assumptions, and that's what the bank is going to. That's what the bank's looking to do. They want someone to teach them about the market, and then also verify you as a developer your assumptions. So it's a mixed bag. Some people come to us and have already done a feasibility study. Some people come to us and are shocked that they need a feasibility study because they feel that they know their market well enough that they don't need a third party to corroborate that. But the lenders, you know, as much as
they want an independent opinion.
They absolutely do. And as much as self-storage has been adopted and embraced by the lending community, on the construction side of it, construction is a local bank market. Most construction loans nationwide get done by local banks, and local banks are still, for the most part, new to self-storage. And so, you know, that feasibility study educates them on self-storage and self-storage specifically in their market.
Yeah. So Devin, from your perspective for the lenders, what kind of data are they predominantly looking at? What?
The main data they're looking at supply and demand metrics and rents. Those are the two number one things that they want that feasibility study to corroborate. Yes, they're concerned about costs, but they're going to get that through the GC and through a GMAX contract or something like that.
Right.
So what they're really focused on is saturation, new supply. I'll add that in there. One of the benefits of hiring a good third party feasibility study expert is they go into, or at least the good ones, they go into the municipalities and find out what the pipeline is. And the lenders are, extremely interested in, what's on the horizon as far as being developed. Are we developing into the face of a massive supply overload in this market? And so, I'd add those three things: rents, supply, demand, and incoming supply in the pipeline.
Yeah, makes sense. So Matthew, obviously you get engaged quite a bit by people to get studies done. What are some of the services that if people are calling you? What are some of the most important services that a consultant would perform? What should people know to be asking for, and what are the things that some people may not necessarily offer?
Well, and I think it depends on what they're doing to a point. I mean, when I talk to somebody who calls me for a feasibility, and kind of like what Devin just said, and RK was echoing it as well. Understanding what your market is. There are certain things you can do before you call one of us that would give you a better lead in on whether it's a good idea. So for example, visiting your comps. One of the things that if this is something you're very serious about and you're putting money down on land and you want to go do this, go to the market and visit it. I think a lot of what I've seen, we've gotten so used to some of the tech tools that fundamentally we're maybe relying on that a little too much. If I could run some, say, demand numbers and it says you need 500,000 square feet in this market, but I go to the market and everyone's 50% occupied, well, that's not jiving together. So you want to go and just do some groundwork. Just like Devin said, you can walk into your municipality as easily as I can, talk to a planner, talk to the building department, find out what's going in. You can visit different locations in your market. Again, and I could even coach some people, don't go in there and say, what's your occupancy? But you can ask some questions to get a good idea of what's going there. If you live in the area, rent a 5x5 at a couple properties and walk in there at night and count locks if you can. Things like that. I know some of that's getting a little harder, but digging into that before you even talk to someone can help you a lot. But in terms of services, it's really a lot of people. There are some veterans that just need feasibilities for, like what Devin said, to verify what they're doing. And then there's other people that are getting into the industry that want to develop. And, also I start sending them out to do some of these things, or talk to someone like Devin first to understand what the actual financial commitment is to this. You don't want to spend the money to hire me and for me to give you a report that may be 100% acceptable to give to Devin if you really can't, if you haven't gotten all the ducks in the row to be able to do that. So, really markets, it's like what you were talking about with RK, the difference between market studies and feasibility studies are kind of where people are because they don't always know where that line is.
Yeah. So RK, what do you, anything else that you maybe do that's a little more unique or people should be asking for or looking for?
Probably something Matt does as well. I do a lot of if-then scenarios. That's really a big part of it is I'll deliver a report and I'll say, okay, this is what I find from my chair and desk and what it looks like. And I may be talking to a GC and he may be able to build at less cost than retail, if you will. And I'm using retail in my SOV or schedule of values. So oftentimes we'll just start doing some if-then scenarios and say, okay, if we reduce construction costs by 5%, what does that do to our yield? If we decrease the cap rate by 50 basis points, what does that do to the IRR? And we just kind of go through different scenarios. And then we play through operational scenarios as well and say, well, what if we have to take a 20% rent discount for 2 years? What does that do to our holding period to get to an acceptable return metric? If I can probably ask a question of the audience that's the most important is early on I ask, what is an acceptable return on your money? Because that's going to tell me whether it's really feasible to them. If you have a threshold and you need a 10% cash on cash return, I don't know that I'm going to get you there with very many projects to give you a 10% cash on cash return in year 4, for example. Maybe in year 7, after you bled down your actual basis because you've had a lot of good cash flows to do that, then maybe I can get you into that 10% cash on cash. But that's just not what I'm normally seeing. So I like to know the threshold. Yeah. The thing I would tell you is be disciplined. If your threshold is 7%, then by gosh, make 7% your threshold. And if it comes in at 6.5, yeah, you might want to think about lowering your threshold, but that's just chasing the tail, so to speak. And so, I say, look, let's be disciplined about it. Let's tell you the real story of what it is. And then if we have to do some if-then scenarios, maybe we play with what we have to adjust in order to get to that number. So for example, I might say, look, if you can lower your construction costs, maybe you plan to build a block building or all brick, and we could do that in metal and reduce that cost. Well, maybe that's how you get to your return metric then. But I don't like to play with the rents. I don't like to play with the stabilization period. I don't like to play too much with the unit mix because I can create a banker's unit mix for Devin that's all 5x5. So it's going to look really hot. It's going to look great. But whether or not you can rent those, totally different story.
Right. No, there's no question. And your comment about what the objectives are is well taken. I mean, we've had investors, for example, that are 1031 exchange buyers. And so if we've had opportunities where we've gone to them and said, listen, we wouldn't take this out to our traditional investors because we think to start out of the gate, this won't yield any higher than 5% returns. And they're staring down the barrel of a huge tax burden. And they're like, we don't care. We'll take it. Close on the deal. We're like, okay. Luckily, it's always worked out, but it won't always. So, you
just to add to that, Ian, what RK is talking about too, about return metrics and all the work that him and Matt do in providing IRRs and cash on cash returns. The lenders aren't overly interested in that, at least in our experience. But what we're seeing more and more is groups using feasibility studies for their equity. If they're out there raising third-party equity, so before they even go out to the debt market, they've gone and gotten a feasibility study so that they can, convince and show their equity investors a third party has also supported the deal. So that's where a lot of those metrics really come in handy.
For sure, that's very important. I completely agree. Just as a side note, even though we're not talking about debt here, but when you're working with people that the lenders know, like an RK or a Matt, and they're coming through with someone who's, Devin and his partners have been, ingrained in the self-storage world for so long. And when they get, the reports and they hear, validated by someone like Devin, it becomes much more credible. So who you work with is obviously very, very important. So I've heard a lot of comments, which I agree with, all about data. RK, we'll start with you on this one. Tell me a little bit about, if you want to really find market rents, who's your go-to, what's your best source?
It's interesting that we have a pretty good base of folks out there who are providing data. There's 4 or 5 really big guys out there that are doing it, and they're all credible. I think each one of them has their own niche, if you will, and each one has their own strength. If you look at the one that begins with a Y, those guys are really, really, really strong, and they've been in the major metropolitan areas for a long time. So if I'm doing a Chicago study or a New York MSA study, they are definitely one of the go-to guys. Everybody else may have good data as well, but I like to get that corroboration from the Yardi data when I'm doing that. I have a lot of entrepreneurial guys, and they seem to focus well and work with the Radius group, the Compass report. And I personally, in every feasibility study that I do, I buy a Compass report regardless, just because I want to have a corroboration of my data that I get. And I'm primarily a store track user because I'm really focused on rates, and I'm really focused on historical rates. And that's what really, really helps me to refine and hone in on where I think rates are going. The other thing is how you strata the rates is really important. And if the data provider is just giving you 10 by 10s, or they're just giving you 10 by 10 climate control, there's a big difference between 10 by 10 downstairs street rates and 10 by 10 in the back of the property upstairs, discounted web rates, those could be a pretty big delta between those two.
Right.
And if you're using the street rates, which we often see in marketed packages, if you will, the deal looks pretty darn good. But when you start to dig into the data and see that you've got a multi-story climate control building and you only have 25% of your space on the ground floor, you got 75% of it upstairs, there can be a pretty good sized delta there between the rates that you're projecting all the way across. So you have to really look at that data provider and make sure that they're looking at the different product type, even to the extent of whether or not they're using premium or value units. Because now with new pricing going on with those spaces that are furthest away from the elevator, you have to be prepared to understand what that's going to do to your overall rent projections. So, I like to look at each one of them with the strength that they have, but I would always encourage you to make sure that your data is corroborated against at least one other source, so that you are, in addition to your own research that you're doing in terms of gathering rents. To me, the most critical mistake that someone can make is a point-in-time rate analysis. In other words, the day they're doing their write-up, they go out to the internet, they pull the rates, they look at it for that day, and bingo, that's the rates. Well, that's great, but for the fact that, did you know that on Memorial Day weekend, Public Storage slashes their rates 50% across the board, all stores? Well, that's going to have a pretty big impact on what you're doing. So if you're hanging your hat on Public Storage because they got 3 of them in your market on Memorial Day, guess what? It may not work out just the way you think it will. It will work out totally better because they've already discounted the rates if you're using those. But you really have to understand, you might catch one of the big companies the day after an auction, and they've got 10 more units in 10 by 10s that they didn't have the day before. Well, guess what they're going to do? They're going to do some splash rates. They're going to try and promote stimulus for that size group. And if you're just doing point in time, you may really have to consider how you're doing that. And that's one of the reasons why I think guys like Matt and myself, we're not looking at today. We're looking at that historical 3-year look back to see what those rents have been like.
And who do you use to get that historical data?
StoreTrack is my go-to, but I do corroborate that data also with Radius. Matt, who do you use? I'm just curious.
Same exact ones. That's
Great.
exactly what I do.
Yeah.
And then I will go online and I'll get some of the point in time stuff, which even though our regular ones show that. But I think that's exactly right. It's the historical stuff. I mean, we're going through some, at least in my career, some really unprecedented things that are going on right now. I mean, I just read yesterday that Extra Space was going to announce that something like revenue was up 21% year over year. I mean, these are historic things that are happening. And, kind of even going back to what we were just talking about previously about returns and things, a lot of people that want to get into this, there's that fear of missing out. I see the deal. I see the deals being done. There's stuff being announced on LinkedIn. It's all over the place. But, it just depends, what are your investment requirements and what do you need? What Extra Space needs to run its stuff versus what you need are not the same thing. So you really need to narrow down, like we were saying, to your focus. But yeah, I use all the same tools as well. And I like a checks and balances system as well. I don't take anything necessarily at face value.
No, I will tell you. So I've been using data very strongly now for, over 15 years, using in different types of real estate. And for a while, about 16, 17 years ago, I was consulting for a short period of time with some developers, and we were helping them find target anchored sites, for example, and use the data, and you bring the developer downtown, down to see the site, and you get there, and lo and behold, they're building a new target, right? And it doesn't show up in the data. So I think your comment is data is a great directional tool, but you got to have boots on the ground before you make a final decision. There's no question. And I think data gets you probably 85, 90% of the way there. But it's as good, it's as good as people putting the information in the system or how it tracks. So there's no question. But I would say though, for StoreTrack, for many years we used it, very intensely on revenue management, and so that was a major time saver and just an unbelievable tool. And we're using them now to find new sites. So I find it to be a really strong tool with, in our opinion, the best data. So, go ahead.
Oh, I should just jump in. It's interesting what RK was saying about looking over a period of time, and anyone looking to get into the business or develop, you have to know your rents over a period of time, because with the lending community, it can cut both ways. One, the lender may decide to comp out rents and just go to the internet on one single day and choose to pull down a whole bunch of rents and look at your pro forma and say, you know what, you're 40% above market. I just went and looked at 7 extra spaces or whatever the market, and the internet rates are significantly lower. So you have to have the data to go and fight that lender and tell them why. No, on that specific day, on Memorial Weekend, this is why, and here's the data to prove why your assumption is wrong. And then it also cuts the other way, right? If you're a developer and you've chosen to use, I'll call it August 15th, 2021 as your day to pull rents, and which arguably could have been the high water mark as far as rents in the industry. If you choose that day and you send your pro forma into the lender, and the lender has gone to all the data providers that we just spoke of and have those reports, because they are acutely aware that that data exists. Now all of a sudden they're coming and saying, hey, you're showing this number in your pro forma, but I've got all this data that suggests that that's not accurate. And to take that a step further, where we are in the cycle right now, we're starting to see lenders underwrite to rents from 12 months ago, 18 months ago. Some are underwriting to rents pre-pandemic, because they're taking this mindset of, is this real? Is this sustainable? Are these rents sustainable? What's this look like if we slip back to pre-pandemic levels? Now, I'm at the Arizona show, and the economist from Marcus Millichap was up, and he was saying self-storage is very, very strong. All the metrics for self-storage are very strong, and demand is increasing. So it doesn't look like it's going to tail that way, but the lenders are being cautious and want to see what it looks like if rents go back to 2019 levels.
Yeah, no, I mean, it's a fair comment too. I mean, you also have a lot of development going on. You have a major shift in interest rates, so that changes the lender's position on these floating rate loans on construction. There's no question about it. So tell me a little bit about, when you're doing these market studies, what are people really looking at now? I mean, you hear different numbers from different people at different points in time about, the big number is really how much square footage per person in a certain market. What are you guys using to advise your clients on a good number these days, and where you feel comfortable? And on top of that, I would say, while there was those kind of generic tests and rules apply, there's also, I guess, the type of competition is obviously, if it's all climate control and you're building non-climate, or if it's all older, crappy properties, and you're building a brand new Class A. So tell me a little bit about what you guys are telling your clients, and what rules of thumb you use.
Matt kind of alluded to it. If I can take this for a second,
please.
That it's really great that we start with square foot per capita as some kind of reporting that's out there. But I long, and believe me, I've taken a lot of shots over the bow for a long time over this. I've always maintained that square foot per capita is a supply metric. It is not a demand metric. And few people ever cross that bridge and get to the other side, because they just think, okay, the national average is 9. This is 7. This is a go project for sure. I always use Las Vegas as an example, because that to me is the greatest example, having lived there 4 or 5 times and worked for developers in that market. You would never have built another self-storage property, because it blew the charts off of every state, every city, every national average. I mean, I remember we were building 11 stores in Las Vegas when it was double the supply number for the US at that time. And you know what? Every one of those stores filled up. Every one of them got their rates. And if you use the square foot per capita, you were going to be either a losing opportunity or you were going the other way. I look at a market, and Matt, I'm pretty sure you do the same thing. The things that really key into me is, has there been rental rate growth? Because particularly with those that use demand revenue tools, they're going to push rents as soon as they have good, strong occupancy and demand. So demand to me then is proven by the fact that they're pushing their rents all the time. Have they eliminated the discounts? Have they eliminated the concessions? All of those to me are really key factors as to where the occupancy is and where the demand is from a pricing perspective as well. So if I kind of take all those factors and look at them and say, okay, maybe there's a lot of new population influx coming in, and I might be able to project based on huge population intake. Or I could be in Pittsburgh and I'm on the opposite side of the spectrum where I'm seeing declining population base, and that's going to factor into my demand ratios. But I think isolating the difference and bifurcating demand and supply is a critical component.
Great. Matthew, anything you want to add?
No, I agree with RK 100% on that. And I agree with his analysis when he says, no, that's what the supply is. That doesn't necessarily mean what the demand is. I mean, I think that also goes into, and I know right now, I think it's a little skewed, because you used to be able to go in and like I say, you go to a market, you find out that says you need 100,000 square feet and everything's 50% occupied. Well, I'm not building there no matter what. I don't care what it is. But then, also talking to the managers. And again, this is why it's important to go to these properties and go and visit, what are their occupancies? If I have certain numbers, I can even back into a utilization rate in theory of what's going on. There's a couple things that you can look at, and it's not just one statistic. I kind of look at this as, which ships are going in the right direction. And is there one that's, maybe the square footage per capita number is not going there, but everything else is, and that's an arbitrary number. It's statistics. And so it's really a holistic approach. I don't think it's any one thing unless I walk in there and, a 10 by 10 is $1 a month, no matter everywhere. I mean, it's really a holistic approach when you're doing this. A lot of people, even when I talk to them that are interested in the feasibility, they know how to, collect data. They can get on any of the things that we're talking about, find the competitors, get the pricing, and they come. I've spoken with people that brought me a box of data that I don't even necessarily need that much information to make a decision on a property, but they just don't know how to process it. And that's where someone like, RK and myself and other people can help you process that data into something that makes sense.
Yep. Devin, anything you want to add?
Lenders look at that metric, but to make sense of that metric, that's where they rely on the feasibility studies, is to find out, is 7 square feet per capita or 9, is that reasonable? Because every market is different. Just anecdotally, we just refinanced a portfolio in Idaho where it was 5 properties, and the supply per square foot, supply per capita was between 14 square feet and 22 square feet for those 5 properties. And the lenders had an absolute fit. The B-piece buyers couldn't get their arms around it. And, we had to, go in there and prove it out. And, what ended up saving the day was that these properties are all 92+% occupied. And the market in general, when the appraisals came back, proved 90% plus occupancy. So it just, it had to do with people reusing it.
That just proves RK's point completely.
Yeah. But now I'm not telling people to go develop in markets that have 17 square feet per capita. That is an outlier.
Right.
Yeah. And your location can have a lot of influence on that as well. I just was talking with a potential client not too long ago, and they had every positive metric you could possibly pull out of the hat in a market. And I agreed with that. I said, that is a really strong market. However, your site is behind an industrial park, behind an industrial building, and this is primarily a single-story market. I mean, it's a horizontal market. It's not a vertical market. You want to buy a 1.2 acre piece and put a 5-story, and you're thinking that because you're going to be able to see it from the road, which is a quarter of a mile away with all kinds of stuff in front of it. I said, that's a little bit gutsy to get out there. But what is even more concerning to me is there's 4 vacant land parcels right on the main road, and you've chosen to go behind this industrial park because the land was cheaper. Well, that $400,000 you saved in land, I could eat that in a heartbeat moment. with a primary location right out on the main road that's all single story. So you really have to think about your location, your product. As Matt said, that was beautiful the way you put it. It is a holistic approach. You really have to take all the factors into consideration and put them all together and then weigh them one against the other and determine whether or not it really is the right site for the right product in the right market.
So RK or Matt, have either of you been engaged at all? I guess a feasibility I don't even know if this would be a feasibility study, but having people find new sites and use the data and your knowledge to find holes in the market. I mean, I know RK, you're developing quite a bit. So are you using your same skill set to do the same?
Yeah, Matt, I think we refer to it as a reverse feasibility study. Instead of you bringing us the site and we qualify it, you bring us the market and we find you the sites in that market. And I don't know, Matt, what you charge for it, but it's fathomably more expensive because it's so much more time consuming to do that. And if they think they're going to offset the price because I get a $10,000 referral fee on the land sale, doesn't really offset it very much. It's a very expensive process to do that. And quite often the client gets a little frustrated because the first thing I do is find the go-to guys who are selling land in that market and say, okay, show me what you got. Tell me what's happening in the market. And they go, well, I could have done that. It's like, well, yeah, you could have, but you chose us to find that information, but also to qualify and make sure it's on the right road. For example, the first thing I do is I do a competition map, find out where everybody is, find out where the new development is going on. Then I overlay that with zoning and say, okay, where is just residential, just not going to happen, right, in a residential. But hey, here's some, B2, maybe I can get that to light industrial, or I start to look for those pockets of location aspects on the right roads. And that's the other thing is I'm a guy who hates those behind this stores. I hate to be even behind a CVS that's, only 18 feet tall. I want to have an office and a driveway right out on the main road so that if I'm on B Street, my address is B Street, my traffic counts are B Street, all of that is right there in alignment. When you start wrapping around behind things without any visibility out on the main road, I think it compromises your ability because I think we've proven over and over again, the consumer wants to see doors and they want to see your office, right? I mean, that's just kind of, I don't know why, but they feel more comfortable doing it.
I mean, there's nothing better than when somebody's going to make the decision that they need storage, the one they've driven by 8,000 times on their way home from work or from visiting somebody. You want that visibility and name recognition. No question. Matt, anything else you want to add?
No, and I agree exactly with RK. I mean, the better the site, for exposure. And this is where I get back to some of the tech tool stuff. I mean, yeah, Google Maps is great and we all want to be on the top and everything else, but just don't override the fundamentals with technology. Do the groundwork and get there and do it. I won't, I do desk studies as well, but for something that's a full feasibility that it's going to go to a bank, I'm going to the market. If I don't go, then I don't label it that way.
Yeah. Devin, are you finding that your lenders, I mean, you're probably working with a lot of the same lenders, but are they getting sophisticated enough that they understand more now and checking their own data sources, or are they relying upon what you're sending them?
No, they're especially the lenders that have been in the market, have been lending on self-storage for a while. They're acutely aware of what's going on. You just, you go to the trade shows and you see how many lenders are showing up. Prior to the pandemic, it was very difficult or more difficult to get a construction loan done because all the talk at the trade shows was, slowing, lease up velocity was slowing, rents were weakening, and we were seeing all of that. And the lenders were acutely aware of that. The data was showing that. The pandemic, had all its negatives, but it saved a lot of people and, absorbed a lot of the oversupply of, 2018 and 2019. And the lenders are aware of that as well. The properties are doing really, really well right now. But like I said before, lenders have long memories, and they remember what it was like in 18 and 19 when they had their, construction portfolios that were struggling and they weren't hitting their 3-year pro formas and things were, getting stuck at 60% occupancy at 60% of projected rent. They remember that. And, so to answer your question, yeah, the lenders, especially the sophisticated ones, are acutely aware of the data that's available and are following it.
Great. How do you guys feel about even considering ordering a feasibility study if you don't even know the particular market well enough on your own? Matt, what do you think?
Well, I mean, I think that there's two ways of looking at this. There's some experienced developers that have done self-storage that have a fairly good idea of what they're looking for when they send you somewhere. You know, if it's a client of mine that knows what they're doing. But going back to the people who are getting into this for new, no, you need to go and understand some things, what's going in your market, because it's not just about, you know, getting me to go and do it or RK to go and do it. It's about where do you want to put your money? You know, you want to put your money in the markets that you think are the most viable at doing this. And if you don't know what's in the market, you're just saying, I want to be in, you know, where I live, Port St. Lucie, Florida, and I just want to build something somewhere. And I've had phone calls where people have said, I haven't had a feasibility study, but I'm dropping 100,000 square feet. It just floors me when that happens, especially for people who've not been in the industry. So I think it just depends on your experience level, you know, and then, you know, if you're getting into this, you're more at that point if you don't know what you don't know. And so I always look at it, especially with that, as, you know, an educational process first. And then if you can hire me to do something, that's great. If not, I'll help you on the next one. So I really think it depends on how much experience you have, whether you want to go right to that or whether you really need to do the research. But I will tell you, even the people that have experience are already doing this research without me even having to say anything to them, because they know what they're looking for.
Okay.
Yeah, I agree with Matt. And I just moved from Port St. Lucie. So I was in that market and trying to develop in that market. And, you know, every time I'd find a site, I'd find somebody that was right around the corner that was doing something that, you know, maybe the sign had even been there for a long time. I can think of one sign that's been up for like 2.5 years that, you know, it's coming soon. And I'm not sure what soon is to them, but at my age, soon is like ripe bananas. You know, it's all a matter of perspective on it. And
I think I know that site.
I bet you do. You know, it's a real interesting thing. I want to share one real quick example. We were moving into the Delaware market. We were in the Philly market. We decided, because we were 100 feet away from the border, that we ought to get into Delaware. So we crossed the Delaware border, and I started looking for sites. And I found a lot of really good sites right where I wanted to be, but I just couldn't make deals on them for one reason or another. So I went down the road a ways and found a site, and it was truly a good B+ site. It was not an A site. I mean, there was a nice credit union right across the street and a veterinary clinic, but yeah, there were old motels, and it was a well-traveled road, but it was not an A site by any stretch of the imagination. But for the fact, it was kind of a barbell site. It was between two really good centers, and I thought, well, you know what, this should probably work. And I got in the car and I was driving home, and I thought, you know, I'm going to the airport, and the first time in my life I've ever been early getting to a plane, right? Because usually you're just rushing to get to the airport so you can make that plane. I had an extra like 30 minutes, so I thought I'd stop and get a Dunkin' Donuts. And I'm driving down the street, and I see one of those yellow signs, and the yellow signs are, you know, zoning signs, right? And so I go and get my cup of coffee, and I think, I'm going to go back. I know I looked at that. They said there were going to be a car dealership there. So I drove back, and I looked at the sign, and boom, it's Pete Williams, and he's way ahead of me in the game now. And the analysts had already called the municipality, and the municipality, they got the wrong guy on the wrong desk at that particular day. He never told them about this site that was already going through the zoning process. I called my guys up and said, you know what I said a half hour ago about that site? Kill it immediately, because we're not going to be able to compete with Pete. He's in a much better location than we are. I know what he paid for the dirt because I tried to negotiate on it, and they told us what they wanted. We would not have known that had we relied on Google Earth and a phone call. To me, I'm an old dirt dog. I'm going to go kick the dirt. I'm going to visit the competitors. I'm going to do it the old-fashioned way, in addition to the data points that I get. And so I think Matt's right on. You have to get in that market, get your feet dirty, and understand it. But when you're driving, you've got to be aware of everything that's around you, because you'll learn a lot about that market. You know, my dad was an old dirt dog himself, and he got more information shooting pool than he did anything else, because he'd go down to the pool hall. You know, anybody an old geezer in town was shooting pool with him, and you know, he'd shoot the breeze and shoot the pool. And I'll be doggone if he didn't find more deals that way, because he was, you know, integrating himself into the community, and he got intel data that nobody else would get.
Yeah, I remember one of the better deals I secured. I actually had to go eat gas station fried chicken with the seller, tell him it was the greatest fried chicken in the world. And I didn't want to insult them. I hear you. But I just wanted to make a comment. I did actually check some of the data points, and it's a good thing you moved, because I saw that there was too many self-storage feasibility consultants in Port St. Lucie per capita than should be there. So I'm glad. I'm glad you left the
Yeah,
market.
it is unique.
Yeah,
Hey,
so
Matt
let's
is such
talk
a
market.
tough competitor. I figured I better go to Orlando. Or
Yeah, I mean, listen.
I'm a prospect.
Yeah, I don't know what the banks are using, Devin, but I think it's any more than two consultants per market, I think is a little too high. Well, any parting thoughts? Anything you guys want to share with our viewers? Anything before we break? Anyone have anything they want to share?
I would say just be conservative. The fear of missing out seems to be very, very prevalent especially for people who are getting into this. Stick to your guns, realize what your investment criteria is, what you can legitimately do, and, don't push things to an outrageous level. If it works in a conservative way, it will work great if you knock it out of the park.
I would say listen to your consultant, because a guy like Matt has huge data that he carries with him that may not be on a sheet of paper or on a computer screen someplace. And listen to him, because he can probably steer you in a direction. I was talking to a client just yesterday, and his vision for the site was totally different from my vision. And when I explained to him what I thought he might want to do with that, we went from converting a 90,000 square foot building that he was paying $8 million for, to building in the parking lot, which he had already paid for in the $8 million. But he never thought about building in the parking lot. It just never occurred to him. And that's the kind of thing that Matt can do for a client, is when he gets out there and looks at it, and maybe he has a different vision for it, and he can share that vision with you and help you to craft the very best project that you may not have even thought was possible. So I would say listen to your consultant and talk with them and figure out how you guys work together and collaborate on a site.
And going with what RK just said in terms of, I know, again, he's saying that I give the information, he gives the same information, does a great job. And I had a client of mine that I talked to this morning that was looking at a potential place for a conversion. The building itself wasn't that big. I'm like, well, can we build in the parking lot? I'd said the same exact thing this morning. So it's just funny how that works. But yeah, listen to your consultant, because I spend all day, every day in this. I can't say that I could do this for hotels or student housing or anything else, but I live my life in this every day.
Amen.
And so does RK.
I would just add that be careful, because your margin of error right now is very slim. You've got construction costs at an all-time high. You've got all of your inputs at an all-time high, labor, and you've got rents at an all-time high. And so, if your pro forma, is off on the rents, and you're modeling to rents, that are today, or growing those rents, be careful, because your construction costs are really high. You're building at historically high cost per square foot. And, if there's any step back, make sure that you're protected.
Great advice.
Yeah, absolutely.
Great. Really, really appreciate you being here. Very informative for everyone in the audience. I'm sure you got a ton out of this, and you'll have all their contact information. Any questions, I certainly encourage you to contact our panelists, who have incredible experience for many years in the industry. So thank you guys again.
Thanks.
Thank you.
Thank you, everyone, for being here. Ian, while I have you for just a quick few minutes before we wrap up, I wanted to share a fact with you that I saw in the polls. 80% of today's audience are not members of the SBOA. So tell them why that's a problem.
No, that can't be right. That can't be right. No, really, membership is really, it's completely informal. We used, back in the day when we started the SBOA, we charged to be members. Now it's free to all. But our mission is just to help people improve their revenue, decrease their expenses, improve the bottom line. So I encourage everybody. Jessica's out there every day. We're on the SBOA, working with our vendors, finding out from our members what it is they need to make their business better, and we want to hear from you. So we have the largest buying power. We're 8,000-9,000 strong, the people that are using our services. So I just suggest you certainly give it a look, and we can help you.
Yeah,
It can't hurt
absolutely.
you, and it won't cost you anything. So.
And it's free. It's free. Whenever I see people say that they're not a member of the SBOA, I'm like, I'm calling them immediately as soon as I'm available to chat why they should be. And before we wrap up, I just want to play a quick video for the audience. As Ian was just talking about, some of our valuable partners, Devin from the BSC group is one of those valuable partners, and we have a message from that group for you. And one final announcement, and we will let you all get back to your Thursday. The BSC Group provides commercial real estate financing advisory solutions with a specialized niche in self-storage assets. Our team has the experience and expertise in the industry to get you the results you desire. We understand each property presents different challenges. Every client brings with them unique situations, and that the financial markets are always changing. The BSC Group team members have completed more than 500 financing transactions valued at over $4 billion for commercial property owners nationwide. Also, the 10-time winner of the Inside Self Storage Best Finance Broker. To learn more about the BSC Group, please call 1-800-605-7880 or visit www.thebscgroup.com. Thank you for playing that, Alec, behind the scenes. And just to let everyone know, not only do you get access to the exclusive offers from our vendor partners that we have in the SBOA Alliance group, you also get valuable resources like our weekly newsletter. You're able to attend these free webinars that we host 2 to 3 times a month. And an announcement for March, we're doing something fun for the month of March. We are calling March our Mystery Moderator March month. That's a lot to say in one sentence. So the next one that we have for you is on March the 3rd. We always do Thursdays at 2 p.m. Eastern Time. This one is how to utilize the hub and spoke business model to grow your self-storage portfolio. We have Alyssa Quill from Storage Asset Management, Jim Ferguson from Storable, Keith Tirico from Synchrony HR, Ryan Stewart from PTI Security Systems, and a really cool guest moderator for you. So check us out on social. We'll be doing some fun clues to see if you guys can figure out who the industry expert moderator is for that session. Thank you, everyone, for joining us today for another Self-Storage Unlocked. We'll see you back in 2 weeks. I hope you have a great rest of your Thursday and an awesome weekend. Ian, take care. I'll chat with you soon. Bye, everyone.
See ya. Thanks.
You're welcome.